What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session, specifically at the London Macro 1 and 2, where unfortunately I didn't get an entry. However, in Silver Bullet Hour there was a perfect 5R trade using the entry model that we are practicing in our macros. Let's jump into the analysis now and go step by step through the entire session so you can see exactly what I was looking at in real time. So the first job is to check where we are on the news calendar, and Wednesday the 21st of Feb, we've got no red news today. There is FOMC meetings actually later on at 2 PM in the New York session, so this may stagnate things in London, to be fair, as we await to see what FOMC have to say. And also we need to be aware that tomorrow is a packed full red day. Lots of news on the euro, lots of news on the pound. It'll be unlikely that I'm going to be trading this tomorrow. So we'll see what we can get offered this morning within the two London macros and go from there. So we'll start the analysis off. We are going to maximize euro. We're going to clear everything off the charts. I'm going to go on the weekly, see whereabouts we are. You can see currently bullish week. Closing over the top of the fair value gap, the bearish fair value gap, so we've closed over 50% as well, which is a good sign. It does mean potentially we could be looking for a swing high. We do have swing high at this point here, so delivering from a internal liquidity, which is this bullish fair value gap, seeking external liquidity, which will be this high, so that's more of the long-term view. Drop to the daily. So the daily, we've closed over the high. There was a body close over that high as well yesterday, so that's quite a good sign. We are leaving currently a fair value gap here. We may come back and rebalance that. I'm just marking this inversion fair value gap here. If price is really bullish, then we may just continue higher looking for external liquidity up here. I'm going to drop onto the 4 hour, just going to monitor this through, see if the 4 hour aligns with the weekly and the daily, which you can see they are bullish at the moment. And so we've broken this high, so we're just going bullish on the 4 hour. This kind of was the low that led to a lower high, lower low, and now we've made a high. So we've broken this here. And so we are now in bullish market structure. We could expect a pullback. Looking for a continuation higher. Once again, I would be reluctant to be taking longs up here, but I would look for longs lower down. We obviously have this as our daily inversion fair value gap for a higher time frame pullback. On the hourly, shows what a monster trade we had yesterday. If you haven't seen yesterday's video, we caught the low in London here, and it skyrocketed, coming up over 20R. And by the end of it, it's a really good move yesterday. That could be an indication that we consolidate today. Point of interest really would be this order block on the hourly, which would allow us to then sweep. We've got an hourly swing low here and an hourly swing low here. If we are bullish, we could potentially take out the Asia low and then look for a reversal higher. I'm still in a premium of this overall range from yesterday, however. So you're not going to get into a discount until you're breaking into this lower fair value gap. I'm thinking potentially we look for the Judas swing, sweep of the Asia low, and then a continuation higher. Obviously we have bullish momentum at the moment. We're broken into bullish price structure on the 4 hour. We're in the bullish price structure on the 1 hour as well. Let's flip to the Dixie. Let's remove these. Here we are on the Dixie. I'm just going to stick this normal way up. So we want to see bearish price action on the Dixie to confirm bullish on the euro. So yesterday we had the move up. We have respected this bearish fair value gap. We've not closed over it. We've not closed over 50%. We did split the high on the Dixie and then we came lower. This is a good sign. External liquidity is all the way down here. So if the dollar is going to be bearish on a long term, we could expect a run to take out the yearly low. Obviously we have a very small fair value gap and fair value gaps here, and then we do have this inversion fair value gap which could cause some resistance. Daily, sorry, that was a weekly that we were analysing, wasn't it? Comes up and then we've rejected, so this week is here. So that was a rejection from last week respecting that fair value gap, and then this week we are continuing lower. We've actually just rebalanced then yesterday this fair value gap. So the concern here is that you're between two fair value gaps with no closure between either of them. And the red news is all happening tomorrow, and we have FOMC this evening. This could be consolidation until we get news, so this may mean that the London session is not particularly exciting. It closed below 50% of this bullish fair value gap. We have swept external liquidity, however, here, and had quite a strong rejection. So we failed to displace below this. Now, one thing that when I'm reading the markets, Dixie is always paramount to me above euro. Dixie will drive the euro price. So if we're seeing a rejection here like this on the Dixie, which looks quite bullish in my opinion, we've hit external liquidity and rebalanced a fair value gap at this point. This makes me think that Dixie could well continue higher. So if Dixie does want to go higher, that's obviously going to make the euro bearish. So although this looks like bullish price action here, there's no fair value gaps here as resistance. It's not clear direction to me. So essentially on a daily, I don't really have a daily bias at this point. Let's go to the hourly and see what the Dixie is doing on the hourly. Again, very large bearish moves yesterday on the Dixie. We've just come back, we've tapped this order block on the hourly and we are rejecting away. London's had a small pullback into the Asia range. So we could again be looking at a sweep of the Asia high. Yeah, Dixie pumps up, takes the high, euro takes the low, and then continues higher. If we look at this in the London session, we can see that actually we're developing SMT here. The Dixie is taking the 2 AM high, whereas the euro is failing to do so. So the euro is showing weakness here. We would expect it to be creating a new high. So this, on the 5 minute, is a 5 minute unicorn. You could say that we're putting a high to a low, lower low, higher high. So we took out these and then broke lower with displacement, which means that these down closed candles, the lowest one specifically is a breaker. and you've got a fair value gap inside it. So you've got this 5-minute unicorn model that set itself up before the session. Still creating this SMT, so the euro's been unable to take that high, whereas the Dixie has taken the high. What would be ideal, in my opinion, would be for euro to be able to sweep these highs while the Dixie fails to take the highs. This would give us bearish SMT. If the euro could come up, sweep some liquidity, and then begin displacing lower, that would be a nice entry for us. Take these equal highs out and then take a run on this low. And it'd be good if the Dixie could come up, attempt the high but be unable to take it, and then begin displacing lower, creating SMT in the process between the two. So we want to see SMT on the 1 minute time frame. The macro is just about to open right now. Close of this candle, 30 seconds left, and then we'll see if it's just going to drop from here without giving us an entry. I'll take these equal highs for a pullback into discount. So we're getting a pullback towards our unicorn entry, and we are creating SMT here, inversion fair value gap. The SMT has just been cancelled on that candle. A little bit frustrating. The initial expectation was met, so we did sweep that macro low, which is initially what I was aiming for. Unfortunately, we didn't get the pullback to get an entry to target that. Having swept the low, obviously we've reversed. Gone for the high into that 5-minute unicorn, but again, I wouldn't take a long at this point because we still had the Asia low just below us. So I think that that's a valid target, and obviously the daily gap opening low from the New York PM session into this order block. So I would have preferred, if this was going to continue, somewhere into this area, looking for a reversal. Right now, still bearish, expecting Asia low to get taken out, but we're not seeing any of the momentum that we'd want to see. Last 2 minutes of the macro, there's no large engulfing candle. I don't think that that's enough for me to want to take that short. See, Dixie is gapping lower into a fair value gap right now. Euro stalling at the fair value gap, so there's no momentum, there's no urgency to come and sweep these lows out. That's it, the last minute of the macro. Now into silver bullet hour, which I won't be trading. I think silver bullet is probably going to run all of these highs. 1, 2, 3 relative equal highs again back into this unicorn breaker block, and then potentially run for the Asia low. There's the macro open, so no entry in macro number 1. We'll come back for macro 2 and see how that plays out. So just come to the charts prior to macro number 2 just to see what happened in silver bullet, and we had exactly what I was hoping for in silver bullet, which is a little bit frustrating. Euro came, swept those relative equal highs, created SMT with the Dixie, so the Dixie was unable to sweep the highs. We had SMT between these 2 points. This pump up, we created our inversion fair value gap. We closed through with a large engulfing candle on both the Euro and on the Dixie as well. Obviously we had the bearish bias expecting Asia lows to be taken out, and so the entry would have been on this candle close. Stop loss would be above the high, a nice 3.7 pip stop. Low hanging fruit would be just down here essentially, having swept this swing low. So that would have been our break even point. We can see once we do break this, price doesn't pull back, so we would have never got stopped out break even, and this would have ran nicely, taking the Asia lows, and then ultimately we'd be looking for our 2R, which I believe it just hit the 2R as well, and taking the 2R. So the setup that I was looking for in macro number 1 occurred in the silver bullet hour at 9 minutes past 3, and so that was the perfect entry, and then down to take out the Asia lows and the obviously the new day opening low from New York PM session. Into this 1 hour order block, we are approaching 50% of yesterday's range, so a potential area in this zone where we could start looking for longs. So a little frustrating that this happened just outside the macro. If I'd have stayed at the charts just for a little bit longer, then I could have potentially taken advantage of that trade, netting a nice 2R. But again, the takeaway from this, what makes me very happy, is the SMT with engulfing candles and IFVG. It's a fantastic entry model. It works majority of the time, so great entry model. So we are into macro number 2 now. We have just approached optimal trade entry on Euro, so we've had a nice drop. We are through this hourly order block at the moment, swept liquidity. Same applies to the Dixie. The only thing is that we've had such a big move during silver bullet hour. I'm kind of expecting this macro to consolidate. I don't think we're just going to get an immediate reversal here, so I'm not expecting a huge move during the macro. I've said before, consolidation prior to a macro is a good sign that the macro may move. A large move prior to the macro means that the macro may consolidate. We've had obviously a very big drop, netting 4.6 if you'd have taken the silver bullet entry, which was just textbook. 4.6, well, if you're going down, run it down to optimal trade entry, 5.3, so a monster trade. Jumping into a reversal straight away here seems a bit risky. I don't think we'll get a V bottom, so I'm imagining some kind of consolidation. So it looks like initially that will be it for London today. No trades. You got to know when to take trades and when not to take trades, and unfortunately we just didn't get the setup we were looking for in macro number 1, despite the analysis being correct. I'm not at the charts during silver bullet due to family commitments, so I wasn't able to take this entry, which produced great results. And then I do think it'd be a little bit crazy to suddenly start trying to fade this after such a big move, and likewise I think it's unlikely that we're going to get a V reversal here. I'm expecting some kind of consolidation around the optimal trade entry before price decides what it wants to do next. And there we have the London session over and done with. So macro 2 did close out. We didn't get any large move. There was certainly no entry in macro 2 to try and fade this drop down from optimal trade. Price is just kind of making its way higher now, grinding upwards. I hope you found the analysis useful. Certainly for myself, it's good to come and review this. It's great to see that the analysis did play out. Unfortunately, we just didn't get triggered in. If you did enjoy the video, please be sure to drop it a like. If you have any comments, questions or feedback, then leave it down below. It's always great to hear from you. And if you're enjoying this kind of content and want to see more videos like this one, then please do consider subscribing. It'd be great to have you on board. Thanks for watching, and I'll see you again in the next video.